Hey everybody, I just wanted to make this video because it's the NEO year, and I want to go over a few things on the top of my head. And I just want to start this off by saying that I'm not a financial advisor, but I am somebody who likes to make money. And I'm also somebody who's pretty observant, and I do spend a lot of time looking at these things and doing research. I do occasionally swing trade, or I will trade depending on, if I see the conditions in the markets are right. More recently, I have actually been trading actively a few stocks, more specifically NEO and a few of the other Chinese electric vehicle companies as well. I was trading in and out of some other companies too, like Lucid, Xiaopeng, and even Rivian a little bit. And Tesla is my another favorite company. But for me, while I do invest in a lot of electric vehicle companies and a lot of traditional automakers, I would have to say that NEO and Tesla are one of my bigger holdings when it comes to electric vehicles. And I actually do value some of the older traditional automakers as well. But more specifically, traditional automakers from Japan, not really from the US. So I want to go over a few things on my mind because I haven't really been making videos regarding this subject too much. And it's regarding NEO and what do I expect for 2022. And I want to start this off by saying that when it comes to dilution, there's a few things that we need to consider. One is that NEO has a lot of cash on hand, so I'm not really too concerned about that. I do apologize also because this is unscripted. This is just me really just saying whatever's on my mind and whatever comes to the top of my head, so I will miss out a lot of things. But yeah, when it comes to cash on hand, they have a lot. So I'm not really too worried about them diluting any shares. They didn't do it on NEO Day, right? Because they just raised cash recently. So I'm not really too concerned about that. One thing I really want to talk about was the convertible notes. I believe that there is a batch of convertible notes that are priced in at at $93.06, I believe. Don't quote me on that. And the value is at around at $1.5 billion, I think so. Yeah, I think it's basically $93 and to break even on these convertible notes, and it's valued at $1.5 billion. These convertible notes must be they must be capitalized on, I believe, in 2026 or 2027. So basically, I would look at these as call options, and that basically if NEO were to hit 93, those investors in particular would only be breaking even, which sucks, right? Because, well, if you invest $1.5 billion in 2021, in the beginning of 2021, right, on NEO Day, and you are expecting a good return on investment that beats inflation, that beats other opportunities, it would have to be tremendously higher than 93 by 2026 or 2027. I would look more into that if I were you, if you're curious about that. But I won't go too much into that. But basically, I would be looking at that as a call option. Another thing I want to go over is that my view on the company. So I'm initially a Tesla investor. I got into Tesla when it was in a very speculative phase. Wall Street, media, everything was bashing on Tesla. And I took the chance because I believe that regardless of all the bad bearish news out there, all the big shorts going on the Tesla, I still believe in the company. It was still doing very well, and it was just as if, what, hey, this company is going to be relevant. It's a game changer, so it's fine. And it paid off really well. So I've been in Tesla for a couple years now, and I see a lot of the same things with NEO, right? Because we're starting from a very from a luxury market, and then we're diversifying into a mass market, right? Through BYD. So there's actually a lot of similarities between the two companies, and I think that's something we need to understand. And I don't think there's anything wrong with comparing NEO to Tesla because the companies are very similar, but I do believe in NEO more because I find that their unique business model when it comes to batteries as a service and swap technology is really important. And the reason is because over time, electric vehicles, they degrade, right? The shell of the vehicle can maintain value pretty well if it's a high quality vehicle, but that doesn't really account for the battery. The battery degrades rapidly. I don't believe that statistics are actually they're being very generous when it comes to the rate of degradation. And I think that, over time, when the standard of range when it comes to electric vehicles is anywhere from, I don't know, 98 to 300, for example, and this is me being generous, when solid state batteries come out, or partial solid state battery come out, you're going to notice that electric vehicles may have an upward of 500, 600, 700 miles of range. So that's something to really consider if you own a vehicle that's unable to swap the battery out. And if it costs anywhere from $7,000 to $16,000 just to swap a battery out through the manufacturer, right, through Nissan or Tesla, well, how's your vehicle going to be able to retain its value? It won't, because the battery is one of the biggest costs. So if you have a leasing service through a battery like NIO provides, then your shell of the vehicle always stays very relevant because it's a high quality build, right? And you can always download the latest software through the cloud. I'm pretty sure when LiDAR is perfected or even furthered, you can attach these things or upgrade it toward your vehicle eventually. So I think NIO understands that they're really going for a subscription type service, whether it be through LiDAR or their battery. So I think it's really important to consider not just the day to day or the year to year, but what's going to happen in 5 to 10 years. And what's going to happen when people realize that their lithium ion batteries are no longer relevant when they have solid state batteries as a norm. So I think that's really something to consider if you're a long-term investor in the company. And another thing I want to talk about when it comes to long-term investing is not only the vehicle itself, but I want to talk about China. So when it comes to the China fear, uncertainty, and doubt, I personally, from my own research, I believe that it's just another tactic for the markets to basically manipulate retail investors and, to shake the weak hands out, right? And what better way to do this than send all this threatening news? But when it comes to the China fear, uncertainty, and doubt, or the China bearish trolls, you have to realize that this has been going on for many years now. This isn't the first time. This isn't the second. This is, the 6th, 7th, 8th time they've pushed this, because markets tend to be cyclical, right? So anytime an industry is beaten down, whether it be in transportation, hospitality, retail, e-commerce, all these things, health, they beat it down in order to find a better entry, right? The institutions, hedge funds, whatnot, and for political reasons. So, it's really important to understand that, just like in the hospitality industry, it was beaten down tremendously. All these COVID things happened, right? And, anytime the markets want to make a pullback, they'll push these narratives. So I think it's really important that we understand this, because you can either capitalize on the fear or you can become a victim of it, and it's really up to you. So do your research. It's really important. I'm personally not scared because I've done my research. And regardless of what you and I think, large institutions, hedge funds, and big prominent names like Charlie Munger, Bailey Gifford, and Kathy Woods from ARK Invest are still buying into these Chinese companies. So it shouldn't really matter, despite what people are saying these days. So it's really up to you. And I'm not, most people don't really know what they're doing, but I think Charlie Munger kind of does. And it would not be beneficial for these for people who invest in Chinese companies on Wall Street, whether they own it through ADR or through Hong Kong shares or Chinese mainland shares, to have Chinese stocks delisted from the US. It wouldn't benefit them at all. And if you don't think that the government's corrupt in the US, they definitely are, and they definitely can be paid off to make sure that these Chinese companies aren't delisted. And okay, so let me think. What's another thing I'd like to talk about? I think because I am talking about the Chinese fear. I do believe that sometimes when it comes to Chinese companies, because Chinese businesses and companies and the governments, right, whether it be U.S. government and U.S. businesses, they all go hand in hand. The government is basically its people and its representative, right? That's what a government is. It's a body of people, and you have these certain people representing the interests of the body of the people. So governments and business go hand in hand, and that's something you really need to realize, that if you don't, if a government and business want the well, they, you know, overall their success is going to go hand in hand in most cases, right? If a business in America does well, it's going to benefit the government somehow, because it benefits the people economically or through their standard of living. But you know what? Just think about it, because I don't want to go too in depth with this. But governments and business go hand in hand. They work together, despite what the news narratives push. Because if your companies fail, your government's going to fail. If your businesses succeed, your government's going to succeed. Your people are going to succeed. Your economy is going to succeed. So, you know, when you look at the Chinese companies or any other foreign companies listed on the New York Stock Exchange, for example, and why their values are so beaten down, why is there bad news pushed around on these companies, why aren't they treated as well as U.S. companies? Well, the U.S. has a lot of there's biases here, right? They benefit. The U.S. has a lot of benefits from having more foreign capital and more of their own people's money invested into their companies, because it allows for more research and development, more expansion, which in turn, you know, brings more tax revenue and economically helps their country, right? In most cases. So it's good for the US, and you should expect that the US is going to leverage their position to better help their own country's company. But as China grows in power, you know, the US loses power, so they can't really be, you know, behaving in these manners. And, you know, as Chinese companies perform better, and as the Chinese government and people gain more power, you're going to see that Chinese companies are going to raise in value. And also, it's not only that, right? If it wasn't just for that aspect, you would have to consider that, you know, we may be seeing a trend where a lot of these blue chip companies from the US and a lot of these companies that rely on the U.S. and a lot of these economies that rely, a lot of these economies and businesses that rely on China, I mean, are going to start lowering when it comes to their profits from China, and a lot of these companies from the U.S. that rely on China and other foreign countries for profit are going to start declining, and you're going to see maybe a gain in profit for Chinese companies, because you're going to see more profit coming from locals, right? Because more local Chinese are buying locally produced goods, right? We see that with NIO, right? Older traditional automakers outside of China are losing sales, while Chinese companies are gaining sales. And, you know, this doesn't only affect in China, this could be in Japan, in Europe, and it's going to be a slow change, but you're going to notice these things over time. So be mindful of that. You're going to look at the quarterly earnings for other companies. You're going to see a decline from China, and maybe that same type of company increase in sales in China. So that's something that to consider moving forward as a long-term investor. And this does affect NIO as well, because I believe that all boats, as the tide rises, it'll carry all boats, and NIO is one of those beneficiary companies. So if China succeeds, the more NIO will. And to further go into that, I think there's something that we need to consider, which when it comes to the value of the petrodollar. And so far, in my opinion, as we deviate away from the value of the petrodollar, this negatively impacts the US in many ways that I don't really understand. But the petrodollar is sort of the alternative to gold, right? Because if we use petrodollars as a means of exchange for oil, that benefits the U.S. And it benefits the U.S. in many ways. Like, it helps the purchasing power of the U.S. dollar. It helps the liquidity. I don't know too much about this, so I'd have to do more research. But look into that, because it makes me want to go further into the speculation where I think that obviously countries are trying to lose their dependency on the U.S., right? They want to get away from the U.S. because maybe these countries, other countries in the world, aren't really benefiting from the petrodollar or the U.S. standard or the U.S. structure. So if you move away from the things that give the U.S. value, like the dollar, like the petrodollar, like things like that, and you go into new energy like electric vehicles, then you don't have to trade. You don't have to. The demand for oil lowers down, so that kind of hurts the U.S., right? I mean, it actually does economically, but it helps these other countries become less dependent on the U.S. And when it comes to trade, they have more leverage, which is, we do know a little about the Iraqi war, right? Once they once the once the people in Iraq, sorry, this is all on top of my head and it's pretty new to me because I've been thinking about it for a while, but I haven't really. Anyway, that's why we invaded Iraq, right? We went on the oil because every time a country decides that they don't want to use the petrodollar to be used as a means of exchange for their oil, the U.S. has to go in there and enforce their democracy. So I think that's really something to consider. And because I didn't explain it well, I would really encourage that you do your research on this. So look into the petrodollar, look into how U.S. relations are with these dictatorship countries that, they like some, they don't like others. Why is that? We don't know. And why is it that a lot of countries want to lose their reliance on the U.S.? Maybe they want better deals on trade. I don't know. Another thing I would consider is, I think I think I went too far into that. I'm starting to lose my train of thought. But I would look into these things because NIO, when it comes to investing in a company, you don't just look at a company, you look at everything around it and how it fits into this, right? But I don't want to go too much into politics and economics right now because it's New Year's, I've drank a little bit, and it's late. I want to go more into the company itself. So what do I think about maybe the ET5 and ET7? So I think these are some of the best electric vehicles on the market, and they're going to be that for a while. And from what I have seen and heard, NIO has improved the ET7 to make up for the release of the ET5. So the ET5 looks good, and people may think that the ET7 is might take away from sales and deliveries, and it might of the ET7, but the ET7 is being improved, right? Because you have to understand this. NIO isn't a joke. William Li knows what he's doing, and so does the staff and the NIO staff. They really do. And they've always over delivered and under promised. And I don't ever doubt NIO because there's no real reason to doubt them. So once you see the ET5, once you see the ET7, both sedans start being released in 2022, these are big deals, and these are definitely going to start changing the numbers of deliveries because NIO has performed very, very well despite only delivering SUVs. So I really would consider that, and I would compare it to Tesla because the growth trajectory for Tesla can be almost replicated through NIO, but at a more rapid rate. So I always like to make the joke that NIO is like Tesla but on steroids, and in the short amount of time that they've made this much success through partnerships, through company development, through deliveries, sales, infrastructure, I would really look at it that way. And you should use Tesla as a benchmark and then see how does NIO perform in that, because once NIO also starts hitting the mass market through BYDD, you're going to see huge numbers of deliveries, and I have a big prediction on battery swap stations and how it's going to become a relevant thing and a social norm moving forward, but I don't want to get into that because I'm too lazy and I'm tired. And I do believe that you're going to see a lot of you're going to see a lot of similarities between NIO and Tesla from the premium market to the mass market. But don't doubt NIO, because I think NIO knows exactly how to navigate through this, and I believe that they know exactly what they're doing. Let's see, another thing. What's going on today? I think that if you're a long-term investor, because NIO will be listing on the Hong Kong Stock Exchange, if you're really scared about the fear and uncertainty and all this and all the bad news and delisting fears, I would I would transfer my shares from ADR to the Hong Kong Stock Exchange. That way, you know what? It's a long-term hold, and you don't have to really worry about that. Because even if NEO were to be delisted, which I really doubt would happen, you won't have to worry about it. And I don't think that the value of the company is going to go down, because I do believe that a lot of foreign capital is going to buy that dip if it were to ever happen. And I believe that people would actually, more institutions would be willing to buy into NEO if it's listed in the Hong Kong Stock Exchange. So, I don't really know what else to say, but I am very impressed with NEO and how they've done, because as a first time, as an initial Tesla investor who bought into NEO pre-Jefe, right, pre-Jefe municipal government investment, they've done really well. They've actually exceeded my expectations tremendously, and I think that moving forward, with 3 SUVs and 2 different sedans, all priced differently, and then eventually with the mass market, I think that NEO is gonna surprise the world. And I don't think a lot of people are ready. I don't think a lot of people understand, and I think those that do understand are probably, building long-term positions while actively trading the stock. Because even if you become a bag holder in your position, there's nothing wrong with holding a company that's undervalued, in my opinion, especially compared to its peers, right? Because when you look at the price to sales ratios for these other electric vehicle companies, NEO is tremendously undervalued. And regardless of the short-term headwinds, I do actually believe that NEO has too much going for the company not to take the risk. And I don't see much risk the lower the share price gets. And I do want to talk about a rumor between NEO and Apple and its probability. Personally, for me, I do speculate on some things, but I think it's good personally, because if you're an investor, that's what you want to do. You want to, especially when it comes to a spec and growth company, you do want to speculate. And I don't think there's anything wrong with that. Like, I predicted that Ray Dalio was going to invest in NEO before he did. And if he did, then my confidence would grow. And then he did. Back in Q2 of 2020, I believe, or Q3. And because I invested in NEO pre-Jefe, I pretty much made a bingo list of what I expected to happen with NEO. And Ray Dalio investing was one of Bridgewater Capital, and he did. So I think with that, I do believe that there will be a reversal in the Chinese market as well. And that's through economics, politics, and even fundamentally through the revenues from China increase, all these Chinese companies increasing in revenue, and while the US may be stagnating or slowing down a little bit in their growth while China rises. So these are big things that you need to really look out for. So don't only look at NEO as a company, look outside, look at the economics, look at other companies. And to go back into the NEO Apple thing, I think that it would make a lot of sense for these companies to do some kind of partnership, like how NEO does with Sinopec and Shell. But I don't really know for sure. But it makes a lot of sense, because it allows for Apple to diversify through NEO in the electric vehicle market. So I think that it would make a lot of sense. There's a lot of reasons why they should. But I think also that I wouldn't bet on it, but it's definitely something that would make sense. But I think NEO has to keep proving its success over time to make it worthwhile. But out of all the companies I've been looking at, it would make the most sense to partner with NEO, especially if they're going to target BYDD as well to better push their products in the mass market. So yes, I do believe that NEO and Apple should make a partnership over time. I don't have anything else to say regarding the company. I'm not a financial advisor. I do believe that when it comes to this company, it's just going to take time and patience, right? Because most people lose when they trade actively. Time in the market is better than timing the market, despite what people nowadays say. And I would just be patient. There's nothing wrong with that either, because if you have time, well, that's one of the biggest assets, right? Biggest commodities, right? Time. So definitely look for opportunities. I think this company is going to do really well. I know I've left out a lot, but hey, I'm speaking this on the top of my head. So whatever. Good luck, y'all.